Hello, good day, guys. Today, I really want to talk about range structure. Yes, I want to explain to us what a range structure is. What are the variants of a range structure? That will be the part B. What makes a range structure valid? That part C. How and where to look out for trade on a range structure. And lastly, how to ping pong on a range. Now, just now, what is a range structure? By mere definition, a range structure is a behavior of price, a behavioral pattern of price, whereby price, using an example of a bullish price action, price has been printing higher highs and higher lows and higher highs and higher lows, and come to a certain point, price printed a higher high, taking out the previous high. And instead of maintaining the structural trend, price came back and did what? And took out the last low that made the high and did what? And took out the last low that made the high and did what? And leaving a range for us. And that range that price left is what we call the range structure. And that range have not been worked with. Price have not returned to that range. Now let's take an example if my definition is not that solid. Now let's look at this. Price has been trending high, bullish. Price has been trending bullish, leaving out ranges. Price made a high here. Price made a high here, made a low. Price made a high. Now, this is a range structure. This is a range structure. This is a range structure. You see, this is a range structure. Yeah, whereby price have not to what? Work with. This is the range that price is supposed to work with in the near future. And now, did you see how price came back and worked with that range, reacting to something inside that range structure, and do what? And continue up. So this is just the simple definition of a range structure. A situation whereby price is giving us a series of a market structure, bullish structure or bearish structure, leaving for us ranges that will be filled in later in the future. I don't know if I make sense. Maybe my English is not that sound, but this is just it. Now, let's dive in with a chart and see. Let's see, this is 4-hour EU chart, range structure. Now, what are the variants of a range structure after explaining to us with a chart? Now, let's go forward again. Now, look at this. Price made a high here, came back here and made a low. Came back here and made a high, a new high, taking out this what? Previous high. Price is supposed to do what? React on this guy, on this demand. On this demand. No, I mean on this supply. Price supposed to react on this supply, I beg your pardon. And do what? And continue up, printing ranges and filling in those ranges. But what did price did? Price took out this low. Price broke this low and gave us what? When price broke this low, it is considered that price had did what? Price have taken out liquidity from a previous high, be it daily high, weekly, or monthly high, as the case may be. If you want to know about structural liquidities, and if you want to know about liquidities and variants of liquidities, you go to my other videos there on my YouTube channel. But now we are talking about range structure. Now, price took out this previous high and came down and did what? Broke this guy, broke this low. Now, price took out this guy, came down and broke this low. Look at this area, this whole area now is our range structure that we are going to work with in the near future, be it tomorrow, be it next year or so. But this is just the example. Price have not worked with this guy. So Hence, there is a grab of liquidity, external, internal, structural grab, daily, previous, yearly. So grab of liquidity to the upside or downside. And there is a break of structure. That gap, that vacuum that price left for us is what is called a range structure. And that is the guy that we are supposed to work with if we are to have a profitable trade. Now, look at the range that price left for us here. This is how many pip range. This is 94 pip range structure. Price left for us 94 pip range to work with after it grabbed liquidity from the previous 4-hour swing point, and it broke structure to the downside, signifying that we are now what? Bearish for the meantime, leaving what? This whole range for us to work with. This is what I mean by a range structure. This is the range that we are supposed to work with now. I hope you are following. Please, if you have a question, don't hesitate to put your question down on this thing below. So now, let's see how price reacted. But before we look at how price reacted in this zone, now we have to talk about the variance of a range structure. What are the characteristics of a range structure? What are those things that are inside of a range structure that attract price to come back for what? Mitigation. Inside of a range structure, we have internal liquidity. Internal liquidity inside of a range structure comes in form of swing points on a lower time frame inside that range structure, inside a particular range structure you are working with. Let's say now I'm working with a 4-hour range structure, which is a 90 pip range, which is okay for us to get like 1 to 10, 1 to 15, as the case may be. Inside this 4-hour range structure, we have a 1-hour swing point, which serves as an internal liquidity, a draw on liquidity. We have a fair value gap. We have a fair value gap inside that range structure. We have a fair value gap. We also have a breaker block inside that range structure. You see, these are the variants. These are the things that are contained inside of a range structure that attract price to do what? To come back inside that range and give us what? A possible buy or a sell scenario for us to do what? Engage. This is not hard. A range structure. A range structure. Price was making what? Series of higher highs, higher lows, higher highs, higher lows. You see that this is a virgin range. This is a virgin range that price have not worked. Because what makes this a virgin range? Because price have not done what? Price have not come down to this guy, to this demand zone. No, I mean to this supply zone, because when there's supply, people buy. To this supply zone to give us what? A continuation. Inside this guy, we have breaker block, we have other blocks, we have breaker blocks, we have fair value gap, as the case may be, that attracts price to come down here and do what? And grab those internals inside those range structure. Those things that I call out are internal liquidities inside those range structure that drags price down to do what? For us to do what? Continue up. This is just it. For us to do what? Continue up. Now, let's look at this guy. You see, price left a breaker block, an order block, a swing point on the lower time frame inside that range structure, a fair value gap inside that range structure. You see how this component that I mentioned are what makes a valid range structure. Now let me go back. What makes a valid range structure? A valid range structure must have grabbed liquidity, sell side liquidity, buy side liquidity. From what point? From previous swing points, previous higher time frame swing points, from previous highs, daily highs, weekly highs, monthly highs. and broke structure to the opposite sides, leaving for us a range to work with. And that range that price left for us is a valid range because it took out liquidity and broke structure to the opposite side. Just like this guy here. Just like this guy here. I believe I'm not too far. Just like this guy here. You see? This is just a typical example of a valid range structure. If you understand a range structure, you will not have headache picking out direction of a trend. Now, look at how price, after rallying down, price did what? Price moved back into what? Into that range, clearing these internal liquidities, these swing points here. See how price clear the swing points, internal liquidity. If you go down to a lower time frame, 15 minutes, 30 minutes, 1 hour, you see that this is the swing point inside that range on the 4 hour. You see this fair value gap? You see this breaker block? You see this other block? You see, these are what price is attracted to. Now, price clear these internal liquidities inside this range, 4 hour range. And did what? And mitigated this guy. Both the order block and the breaker block. Price tapped into all of them. And did what? And start rallying down. And we expected to continue down until do what? Until this range structure is completed. Now, this will be our sell side liquidity. Now, this sell side liquidity is another draw on liquidity for us to do what? Complete this range. There is a high probability that this range must be completed. You see, there's a higher probability that this range must be completed. This is just it. Now, how can we look at trade on a range structure? Now that we have identified what made this range a valid range, it took our liquidity, it broke structure to the downside, it left for us internal liquidity, a swing point here. It left a fair value gap, a breaker block. It left for us what? An order block. Now, how do we look out for trade on this range? Now that we have identified our zones, we have identified our order block, you can also say it is a POI. Order blocks can serve as a POI. This other block now is our point of interest. So whenever after this scenario has been printed, and now price have did what? Price have tapped into our order blocks, our POI. After doing what? Grabbing liquidity, yeah, tapping into, filling this fair value gap, tapping into our order block. We now go down to the lower time frame of our choice. It could be 15 minutes, it could be 5 minutes, it could be 1 minute, it could be seconds, just the lower time frame of our choice. And now look out for that same scenario that has played out, that has given us what? A structural point for us to work with. Now, inside this, since price have tapped into our POI, now let's see. Now, inside this area now, we now look out for what? The same thing. Price tapped into our POI and did what? Grab the same liquidity from outside and did what? Break structure, tapping into this guy and did what? Continue down on the lower time frame inside what? Inside our POI. That price left for us on the range that it created for us. It is not supposed to be hard. Just pay attention. It's not supposed to be hard. You see, this is the way we look at for trade opportunity inside our range. Because anytime I come on the trade from on Monday, Tuesday, or as the case may be, and price did not give me a trading range by doing what? By printing for me exactly as it has printed here, I'm not trading for that week. If price did not give me a tradable range, a valid range structure for a whole month, that whole month I'm not trading. Because a valid tradable range structure is what gives me what? A confidence of a particular direction. We look out for this on a on a time frame of our choice inside this range structure. Now, how can we ping pong? Because some people, we see a lot of people ping ponging. They buy, they sell at the same time, and both their buyers and their sales are always in profit. And we wonder whether they are framing it. They are not framing it. Now, let me explain to us how we can ping pong on this range structure that we have identified. Now, let's say price gave us this range structure. Price gave us this range structure to work with. You understand? Look at the range structure price gave us to work with. Now, we have identified that this is the range we are supposed to work with. And in this range now, we are supposed to sell if price do what? If price tap into our, we are supposed to sell from this range if price tap into our point of interest, our order block. But now, instead of us to wait for an opportunity to sell, we are buying from here. We are buying from this guy. We are buying from here. Instead of us to wait for this sell opportunity, we are buying from here. Why? Because of the confidence we have on this range based on data we have collected from a valid range structure. Based on data we have collected from a valid range structure, we are taking a buy from this guy. We are taking a buy from this guy. And we are going to buy till we reach to this guy. Then we start selling from this guy again, you see? We start selling from this guy again. Down to this guy. You see? And in the situation whereby we are buying here, look at, if you go down to the lower time frame, you also see another buying opportunities. We also see another buying opportunities. And they will buy until, as they are buying, they are taking their profit and putting their stop to what? Break even. Until they reach to this guy, their POI. Until they reach to this guy, and they do what? They start selling again. This is ping-ponging. They are not ping-ponging blindly. They are ping-ponging inside those range structure they have marked out. And they are very confident because that is a valid range structure. You see? They are not ping-ponging blindly. They are ping-ponging inside the range structure that they have marked out. But as they are ping-ponging, their main target is to do what? Buy. Their main target is to buy from this guy to this area. But price is currently at this level. So they will do what? They will now sell from here to this guy before they start doing what? Before they start buying. You see? As simple as that. So thank you, guys. If you have any question about range structure, don't hesitate to ask me. You can DM me on my Instagram. You can also follow me. You can DM. You can also leave the question on my YouTube channel. I'll get it and then I'll answer the question. Thank you, guys. Thank you. All right. That's it on range structure.